Hello everyone, welcome to CryptoPi. In today's video, I want to talk about the 200-week narrative for Bitcoin's reversal. If you like the analysis, then do hit the subscribe button and engage with the channel. Alright, so what do we have here? It's the Bitcoin in the dollar pair, and the green dashed line is the 200-week moving average. What we often hear on social media is that when the Bitcoin price reaches 200-week, there will be a strong support and reversal of the price, which is true if you look at past cycles. Over here in 2015, we saw 200-week moving average acting as a support for price, bouncing back a couple of times and then going back into the bull run of the next cycle. Similar thing happened over here. However, the accumulation here was much shorter. So price bounced back from 200-week a couple of times, and then the new rally began. We had a corona crash, where the 200-week moving average was seen as a partial support because the price did close below 200-week moving average. However, the candles were not completely below 200-week. And we already know what happened during the corona. There was a lot of printing and money printing, and then that money basically moved to risk assets. In the year 2022, 2023, price went below the 200-week moving average. The whole candle was, the price action, the whole candle was under the 200-week moving average. We did see some initial bounce, which was perceived as a relief rally that, all right, 200-week moving average is going to hold true again as a support and we will see a reversal. Though that did not happen. We saw price continue to stay under 200-week moving average for almost 28 weeks, 196 days. That's quite some time if you consider. So it's from August 2022 till March. That's a long period of accumulation where price was under 200-week moving average. So this narrative that 200-week moving average will act as a support, this whole model that the narrative has been built, that 200-week moving average is for some magical reason a good support, perhaps is just magical. It's not a right argument to perform technical analysis. Additionally, what I want to show here is what does exactly happen in computation of 200-week moving average. It basically takes the value from 200 candlesticks in the past and averages it with the current price action. So what happened 200-week in the past? I already drew that. 200-week, that's 200 bars. This was in April 2022, and that was when the downtrend was very strong. So that's when the downtrend basically gained very good strength against the bullish narrative or bullish component. Now, if we would add this, let me see, bars from here. If you will add it with current price, your calculations would always be going to downside. That means the slope of 200-week moving average will be going downwards rather than upwards. So the prediction that 200-week moving average for some reason will go up and we will have a bounce from here does not hold true. If the price is going to be averaged with this bar pattern, there is no way that 200-week moving average is going to go up. Rather, it might stay sideways for a while and then go downwards. It's for 200-week moving average to really start going upwards, price has to shoot back from here. Basically next week, in the coming days, price has to start going up exponentially, which we have seen already from various indicators that it's a very unlikely scenario that price will start going parabolic from this price action. If we look at Indian oscillator, the bullish component over here crossed under the bearish component. So the green line crossed below the red line in November. And the bearish component, the red line, right now is at 17,751. Bullish component is 0. you look at the trend strength, we have seen the bearish divergence, which we already discussed, which we have already mentioned and looked at quite some detail in previous videos. We saw this bearish divergence, and here it had tripled. So first, or not tripled, but we can say doubled. And it's on a weekly time frame. So a bearish divergence on a higher time frame has much larger influence on the price action rather than a bearish divergence on a lower time frame like 4-hour or a day time frame. Price started going upwards, or at least started making higher highs since March, and the trend started going downwards. That's the second signal. The third signal, which we have discussed, are this accumulation and distribution lines. What we have seen historically in Bitcoin price action, that whenever the price crosses the distribution line, it takes almost a year for price to start going back up in the new cycle until price crosses the accumulation line. Here we have seen price cross distribution line. It was in the bear market until it crossed the accumulation line. It's the same story in 2022, and it seems that we are repeating the same pattern here. Another confluence which we have is the midterm year. These are the midterm years. After every single midterm year, the price has, in the beginning of midterm year, the price is already in the downtrend, and it has never in the past, in the history of Bitcoin cycle, it has never made a new all-time high in the midterm year. It only happened after price crossed the start of pre-election year. So there are multiple confluences, and people who think of fundamental analysis to take the trade or create this narrative that we are going to see another bullish rally from here, which will cross 200K. I want to show some fundamental analysis here, which is based on the long-term holder supply. In every cycle, the long-term holder supply has started going downwards as the price goes in the bullish run. And on the other side, the short-term holder, they start buying. The short-term holder supply increases when we are nearing to the top of the cycle, over here. In this one as well, there were very few short-term holders in early 2024, and then the number of short-term holder supply increased when Bitcoin had crashed just a few weeks ago. The downtrend had already begun here. It's good to see these two charts together rather than analyzing them individually. Here one might say that, look, the long-term supply holders already started buying. Yes, they did, and they took profit. And if you would zoom in, they sold when the price was at the top, and they stayed sideways. They started accumulating again at this point when price was already down 40-50%, and the accumulation continued up until the price was at 100K. And then when it was 120, we already start seeing that long-term holder supply is going down. These are basically whales, the big holders of Bitcoin. And if you would compare it with every individual who is not a whale, if you aggregate how individuals are buying, it's very different than what whales are buying. If we come back to the chart, we see the same thing. Indian oscillator, after every time when price has crossed the distribution line, the bearish component has gained strength against the bullish component. We see that the bear market was confirmed and the price goes downwards up until the accumulation line. Our accumulation line calculation is in September, and it is to be noted that the bottom of the cycle is not before the price has crossed the accumulation line. It happens after the accumulation line. So just because price has crossed the accumulation line does not mean that there will be a guaranteed reversal. It's better to look at it with confluence with Indian oscillator, that all right, we have bearish component losing its strength against the bullish component. And it is now the time to look at Bitcoin from a new cycle point of view. That would be all for today's video. If you like the analysis, then do hit the subscribe button, and I will see you in the next one. Bye-bye.